Axis alive? Axis alive? Welcome in, everybody, to the Creed of Crypto live stream. My name is Boi Crypto. I have here with me our special guest, Axis Alive, returns to the show for the third or fourth time or something like that. I'm not real sure. It's not really that big a deal, I guess, to know the exact amount. We have Ewok, Crypto Ewok, of course, here as well. And welcome everybody in. I see we got Tam in the chat there. We got Crypto Elite, I guess it is, in the chat. We got Mikey, Hexagon Army, Scrubhead, Timothy Harris, KN20. A lot of unfamiliar faces because Axis did us a favor of getting this tweeted out today. So I know a lot of people are in here based off of that and wanting to get to all these great points we have tonight, because we have the Ethereum ETF is officially live as of yesterday. We have Bitcoin and ETH both kind of selling off, of course, on the news, which is fun. PulseChain, of course, has been kind of bullish looking over the last couple of weeks. We're going to talk about that. What the PulseChain kind of bull market timing may be. When, like, are we really this close to seeing a top for PulseChain in this bull market and a lot of other assets? We have a million ways to go. We're going to let Axis kind of have free reign a little bit tonight. We're going to go all over the place. So we would love to hear from you guys, of course. So hit us up in the chat. We want to hear from you. Get your opinions in on everything we're talking about, but appreciate you guys being here. Smash the like if you're making your way in. But gentlemen, how we do tonight? Axis, we'll start off with you. How you feeling? You're
feeling really good. I think the ETH price held up quite well, and maybe the ETH BTC ratio will give us some insight into where we're at in the cycle. I think I just want to take the time tonight to answer anybody's questions that they may have regarding the market. Maybe we can do a broad stroke overview of the macro setup, something that we had touched on 2 weeks ago when I had stopped in for a little 10-minute jolt. But take that a little bit farther, but then also get into like, part maybe our stances on, what's going on. I don't want to say politically, but just, and give our fundamental analysis on what's going on and how that supports different perspectives on the macro setup leading into the next 6 to 12 months. And then we can roll into PulseChain and Hex questions. I know we're going to have some of those. And then I wanted to take time to go over a lot of the good yield generating opportunities on PulseChain right now on these, of course, the PulseChain, PulseX farms, but also in 9inch and 2Fux and Fux.io and potentially like SparkSwap and some of these other ones as well. So because there's just unlimited amounts of alpha strategies, metagame that you can play right now on PulseChain, while charts are kind of like chopping up and down relative to each other in the ratios. It gives you a chance to like kind of capture more units at the lows before we blast off here in the next few months.
Well said. Yeah, there's still a lot of exciting things going on in crypto. It's a period of the bull market where it's kind of just like, if you've been here before and you're smart, you know that people are kind of depressed and still fighting on Twitter about prices and stuff like that. But I mean, this is kind of the slingshot period. I mean, we're feeling good, kind of consolidating here across a lot of different assets and stuff like that right now. I guess we could start here, and Ewok, you can get involved and take whatever direction you want to too. But I just want to start, I guess, with Bitcoin and Ethereum, of course. And you just said it, Axis, about so we have the new ETF from ETH trading live. So far, it's not like there's been a huge sell-off, but a sell the news event overall. And you mentioned it right there. I mean, huge inflows or outflows, I guess you should say, of Grayscale selling ETH right now. And despite that, the price really not tanking. So maybe it isn't totally a sell the news event, and maybe ETH is actually kind of bullish on this and absorbing some big hits. But let's kind of start there. What are your overall thoughts of how, first off, just the fact that we are here, just the fact that we do have an ETH ETF that's live.
Wow, it used to be the dream, right? We'd have ETFs for Bitcoin and Ethereum. I mean, it was the dream to get there, and here we are now. We have it for the top two cryptos. Like, what an incredible time to be alive. I think this is going to lead to this is the opening of the floodgates to give institutions easy access to cryptocurrency, and it's going to bring a lot of cash into the space. A lot of that's going to land in the pockets of the fund managers like Grayscale, BlackRock, Fidelity, Bitwise. These guys are going to be in control of a lot of this. So the question then is, how are they going to continue to rehypothecate their products and take all the margin, or are they going to, use some of that capital inflow to help also boost the price to keep the bull going longer? right? That would be really exciting if they would, if that's part of their battle plan or strategy. I was looking at the, here you can see the volumes for day one of the ETH ETF. They're $458 million was on just the ETH Grayscale. That might have been outflows, right? And I don't know if these are all outflows, but that figure, I'm almost 100% that was outflows, $458 million. And then BlackRock and Fidelity did a combined about looks like about 400 million. And leading into this day, there was like $1 billion of ETH deposited on Coinbase Institutional from BlackRock and an additional $1 billion from Grayscale. So, it's all prepping for the big volume and stuff that came in. So this was not as big of a success as the Bitcoin ETF so far, but it's just a beginning. So it's excited to see where this goes. The Bitcoin treasuries.net here. I was going to bring this up just for the sake of showing you guys how much Bitcoin they actually have. Yeah, you wanted to say something?
Not me. Ewok,
no.
are you piping up?
No, I'm
go
good.
ahead. You're good.
No,
You're good.
You're good.
Check this out. Like there's so the iShares Trust. This is the Bitcoin trust from BlackRock. They have 334,000 Bitcoin. And kind of my thought process here is that's not enough to fully control the Bitcoin market yet. So, and the reason why I think that is because you could say there's about 7 million free float Bitcoin out there. And so, yeah, a lot of the supply has been snatched up and most people are going to hold it. So, man, isn't that crazy that even with these kinds of numbers, Grayscale holding 272,000, Fidelity has 181,000, ARK has 50,000. It's still not enough. And it's pretty, I would say, in terms of big whales, like of different kinds, like you got governments that hold, like the US government is the biggest government that holds right now, currently 213,000. So I still think there's opportunity for the institutions to not have full control yet, but still be in a position where they can recycle the money. Everyone remembers the ETH adoption amplifier and the recycling of the ETH to get all the hacks. Well, they could potentially recycle the profits from their ETFs back into the market to help, create shortages and boost prices a lot longer than I think people think. And so this kind of leads nicely into potentially a longer cycle. At least that's kind of what I'm seeing. But yeah, what do you guys think?
That's crazy to look at that. And, just knowing that this ETH ETF is now live, I don't feel like we had any kind of front running. Normally when things like this, when Bitcoin was about to be approved, there was all kind of front running. So what's your opinion on why there wasn't as much ETH front running? I mean, I figured we would have been over 4,000 by now with just people trying to, get ahead of it and jump the gun a little bit, but that didn't happen. It kind of went the other way.
Yeah, so we'd have to go back and see what happened. And this is kind of the action on the 4 hour. This was big. Let's look at what Bitcoin did when that stuff was going down. This is kind of the price action we got, which is what you're referring to, where there was like a pump and then that wick high and then a complete dump, sell the news basically.
Well, that was the fake approval, right? I think like that's the day that there was that it's approved, and then SEC, somebody said our account was hacked. I think that's the day.
I remember that happening, but I don't remember when that was.
I don't think
Cointelegraph.
I could be wrong. Let's just say that I could be wrong, but I think this was the real launch. I think. And then it sold off hard into that, and everyone's like, "Oh, that was it. Sell the news event. It's over." For a while, and then people were like trying to play out that fractal from 2019 here at this point in the cycle, but that didn't happen. And it caught a bid down here. And I think that was because of the shortage of coins at that time. But anyways, my point was that went up before down. Yeah. And so I was theorizing that, wouldn't it be poetic if ETH just did the opposite and went down before up? It's kind of what I was thinking. But not massively, just, a little bit. So here's your front running, double bottom, clean, and then a nice, this funny because crypto does the opposite. So rising wedge, that's supposed to break down like this. But then you got the manipulation, right? The whales push it up, and then you get a distribution top leading into this event, and now you're going to probably come back down and test. maybe get a higher low, maybe it actually tests for a double bottom or something like that. But this is kind of what I'm seeing. It'll be short lived. It'll be down before up, essentially. And then because of the shortages in the supply, which we've covered before on your stream, there's like we're basically at the lowest levels of ETH on exchanges since 2015. Like it's almost like at all time lows. And to also complement this analysis and just kind of give you guys like the 2 to 5 year picture outlook. Ultrasound Money shows you like the inflation metrics for ETH, and if you put it on a global time, let's say I'll go global, I'll give you the Bitcoin as well, and let me get it nice and big. All right,
that's what she said.
That's right. So the white line here, this is ETH proof of work. So this is if from the date of the merge, if you never got the merge, right? ETH inflation would be up here at 3.1% per year. But instead you got the merge. And so then what you do is you take away the inflation rate, and now you have a dynamic inflation rate, and that's this blue line, and it's coming in at less than Bitcoin's inflation rate. And this is because when the network gets really active, it deletes coins. Right. And when the network is not a lot of activity going on, it inflates slightly. Obviously, you can see here it's 0.8%, 87% per year. So in terms of new coins getting minted, it's like less than 1 million per year right now. So super low inflation and shortage of supply on exchanges. And then you'd have to take one more look into like the DeFi sector and find out where all this 120 million Ethereum really is. It's scattered across like dozens of layer 1s and layer 2s and locked away in liquidity pools. And I mean, it's really is like the oil of DeFi, the oil of blockchain technology right now. It's where all chains source their liquidity from. And so this sets up nicely for a shortage of supply. And so even if we get the downside short term, it's gonna bottom out and we'll go higher into the end of the year, I think. And maybe we can stop there and then let you guys have a go at it.
Well, that makes a lot of I think that would make a lot of sense. Like even retesting those lows there, and the greater market. I mean, they'll kind of panic if that happens, and everybody that's currently calling for the death of ETH right now, which I can't believe is still happening, but it is. Once a maxi, always a maxi, I guess. But I mean, if we see it go down to that 2,800 range, I think people are going to panic, but. I'm with you. Yeah. I mean, and looking at that time frame, I mean, a lot of people have kind of looked at this fall as the next real bullish period. I mean, I know even as soon as August, things starting to perk up. But I mean, really, October, November, I think we were talking about that when you did pop on last time. But looking at those 2 months in the fall in the U.S. and of course, it's coincide. People will assign different stories to it, but it coincides with the election and things, which is in November. But yeah, is that when you're kind of looking for like, will BTC maybe get to new all-time highs again? And, more importantly, we're talking about ETH. Where would we see ETH at that time? And I guess, like, do you think that ETH makes a new all-time high still this year? Or do we start to just see it, perk up, have bullish action? I mean, we're only 4,800 or whatever is the all-time high. So I guess, yeah, what's your kind of timeline for that through the end of this year?
Yeah, I think, so just a quick time frame analysis from this ranging period here, where it took us, to break this high, it took about 280 days. I think I just counted. And so 280 days into the future puts us at the end of November. So, I mean, yeah, I think that this is going to set up nicely for a breakout by then. Of course, it does feel that way to me. Pending, the base case being that the stock market has higher to go. And we don't get a cut in rates earlier. But if all that stays on track, then yeah, I easily see ETH hitting 5,000-6,000, and it could go as high as 8,000 this year even. But especially and so 5,000 in a rejection sounds a lot nicer in terms of like predictability. Yeah. But yeah, definitely gonna. I kind of like that ETH is taking its time. Consolidating at these ranges and then building up and then running out of supply. It feels a little more like it has a cadence to it. Mm-hmm. But I think the real sauce anyways to kind of finish off on Ethereum here is because we're reliant on that in PulseChain for price performance. I think the real message here is this, and I think I had it on a monthly. Let me just double check. Yeah, so if we look at the Ethereum Bitcoin ratio, so this is Ethereum priced in Bitcoin. I'm sure you guys are familiar. And we look at these indicator panels. This stochastic RSI here in the middle, I'll push it up one. Okay, so this panel here, anytime that you get a bull cross and then a cross of the orange line above the 20 line, then that's usually signals momentum enters the market. And you can see when this happened 5 years ago, that started our parabolic move where ETH actually began to overperform Bitcoin for an extended period of time. And if you notice, what did we just get? We got, well, in last cycle, we got the first bull cross here, and then we got the fake out, and it faked out on the stochastic, and then it did it again and confirmed and went. So where are we at here is, you know, number one, number two, we had our first one, and then the fake out, we're going our second one. Orange line's above the 20 line. So momentum is now entering the market on the ETH BTC ratio on the monthly. So assuming we're in the same place as we were 5 years ago, we're getting ready for this move. And if you draw a fractal on that, not that it has to play out in the same way, but if you were to, this is kind of what you get out of the whole thing, is that we'd be seeing ETH peak next end of next year or in 2026 actually. So it's the perfect setup on the technicals. I mean, you can see it here in the stochastic. You could see it in the MACD. Like, you got the bottom here. This, all that has to happen is this red RSI line just has to reverse at or above where it bottomed at 40. And it's funny because look at how true it is. Just pure. You get that first bottom, and then now this is coming in for the second bottom and a bounce on the RSI. And then we start to work our way through the mid bands of this. It's like this is a combination of like a Bollinger Band meets RSI. Once you get above the midline, it goes green, and that's when momentum's on your side. So
Right.
ETH has some work to do to get through these bands, but once it does, it's clear skies.
So what's the likelihood? We kind of talked about this a little bit last week, whenever, like, I think it was a little bit after you got booted off there, but what is the likelihood of a flippening, and what kind of ratio would ETH have to be? Like you said, that high was like 0.11. Is there an easy way to figure that out?
This site gives us an idea. It doesn't need much. So right here is the level. I don't know if it says the actual. It says it only needs like a 1x, I think. So a doubling would get us there. But I mean, you're talking about market cap, yeah?
Right.
Let's see here.
Because I know Bitcoin, although it's still inflationary,
It
and
looks
right
like
now,
like a 3x, because like we got 400 million market cap. Bitcoin's at 1.3. How much does 400 go into that? 400 divided by 1289, 31%. Yeah, we need like a 3x to flip it. So in ETH BTC ratio, I mean, it's up there, guys. We'd have to make new all-time highs.
Yeah, for sure.
It would be right. Actually, it's right at the all-time high. See that?
And that's without Bitcoin going up too.
Right. Yeah. So, I mean, that's interesting, because I don't know if we need to see that obviously we don't need to see that, but it would be, I think what you do is if that were to happen, doesn't that imply that the world figured out that ETH is more valuable, that the world figured out that you can actually build stuff on it?
That was my point.
Yeah. I see where you're going.
I mean, it would be the acid trip of all acid trips for people that have been invested in this market.
Well, the sailors of the world would just be like,
yeah.
I mean, it logically makes sense that ETH should be worth more than Bitcoin at some point, and it's just a matter of when, I think.
Right.
Especially if they if they make it even a better utility, right? If they can bring the costs down, then you have an even more powerful network with shitloads of liquidity. Be interesting to see. I have a hard time with that, answering that question, because I just don't know. I don't know if the world's going to get smart in that amount of time. I don't know. I wish I did, but I guess my bet is on PulseChain, which is that in any event, Ethereum does get way more adopted from here.
Sure.
Definitely. Yeah.
Yeah, I just didn't know if there was a set ratio, like or not. You know, like I said,
Yeah,
we're
it
at
would be
0.11.
It'd be
Yeah, is that
0.153 of a Bitcoin.
okay?
That'd be it.
So we
And
need
that
a
allows for
yeah.
Bitcoin's change as well, right?
No, that means Bitcoin stays at this price and ETH goes to 3,500 times 3, so 7,000. Like
Gotcha.
little, it would be close to 10K, right?
11K or something like that. Yeah. Yeah.
Yeah.
Well,
Seems
you
a bit
just
steep.
yeah, exactly.
Nobody wants to pay that for ETH right now.
Right.
Yeah.
But sometimes the market doesn't care and won't let that's just it. Is like, do you guys remember the feeling of Hex at 50 cents and how disgusting it felt and how little amount of units you'd get? It was hard to buy up there.
Yeah.
Yeah.
No, I made it pretty easy. I made a couple
didn't?
buys.
You did, Jim?
I didn't
it.
buy it.
I
I
bought
didn't
it
buy it at the
42.
top.
Hey, but here's the thing: is like I bought at 42 and then it went higher, but I didn't sell. That was the problem.
Right.
Anyway, just funny because at that point you're thinking to yourself, oh, it's going to go to $1. Oh, it's going to go to, because when you're really in euphoria and price discovery, every target seems like you can hit it.
Mm-hmm. Oh, I mean, everybody, I remember distinctly me and Ewok hanging out at a campfire talking about, and we weren't alone. I mean, many people were like, I think this was in September. I think it was basically at the top. We were talking about like $1 hex by the end of the year or something like that when we were, hovering around 50 cents. So, yeah.
I've got a couple questions here I want to cover before we move on.
Go ahead.
So I don't have to type
We'll
this
put
in.
them up there if you.
Bitfinesse was the first one to ask: is there bearish divergence on the Bitcoin weekly chart between December 2020 and May 2024? Let's see. Let's see. You said the weekly. I can't. On the BTC weekly chart between December 2020 in May of 2024. December of 2020 would be.
That was whenever it popped up to 20K. Or no,
we're still way down here. So there's maybe he's talking on the RSI. I see what he's seeing. You see on the RSI here?
I'm not understanding what he's asking.
He's asking if there's if the market is trying to tell us that this market cycle is weaker than previous market cycles because that we already tagged this high of 88, or it's too early in the cycle.
Right.
And is this bearish divergence? I mean, it's a technical bearish divergence, yes. And so actually Steve Courtney from Crypto Crew has been talking a little bit about how much heavy weight is above us on Bitcoin, and that there's a potential setup that's going to be uncomfortable for a lot of people because they're not going to know what's going on and they're going to think the market cycle is over early. So what this has to look like is, I mean, Bitcoin basically has to break all the way up through here, and you got to hope that it makes a new high on the RSI, which would be a 90 or higher, which is like a big ask at this point. And so what that might look like is sometime here in the not too distant future, Bitcoin goes ballistic to the upside. And what that might look like is this flag breaks out, maybe something like this. And then, I mean, it just goes straight up to like 90K, and then it hard rejects like this and makes new lows. And then we get like a mid-cycle correction. Actually, it doesn't even have to go. It hits 90K and it hard rejects down and it tries to get up. And then we start this like sideways corrective period, which is what I've been waiting for a while now, because this is what happened, mid-cycle last time, something like this. If I throw on, go ahead. Is it like the log? If I go on log, it'll be a little more clear, but because I do believe that this is to the point about the RSI showing that bearish div, because then what you'd get is, let me delete these out here. So what you'd get then is you'd get the RSI would come up lower and you'd get this bearish div here. You see what I'm saying?
Mm-hmm. Mm-hmm.
So it will make a new high, but you'll actually get a bearish divergence on the RSI, which gives us more time to reset. And this again pushes our cycle out farther into 2026. So this whole scenario, I think is highly likely just because of how early we were on this move here. And that could have been because of the ETF. And so we just need more time to go sideways, I think.
More
And
consolidation for sure.
And we can kind of coincide the time thing, I guess, with what the title of this stream was. With like, when would PulseChain's high be? But I want to ask you that because you've talked about the 2026 thing many times. Sami's talked about basically the scenario you just described. He's been talking for 2 years about the dark prophecy scenario and the ETFs coming and all that stuff. I think you're 100% right. Like you were saying, it's Steve Courtney, right? Saying that like people wouldn't be prepared for that. I think you're 100% right, because I mean, it'd be like, okay, like 90K, 85K, 90K, here we go, 120K is coming, and then you hard reject off that and then get to these new lows and stuff. People are like, that was it, now we're in the bear market, and it ends up we're not, and we just need more time. I mean, do you think of all the scenarios, I think I know the answer, but do you think of all the scenarios time wise for this cycle that is actually the most bullish one, because we get more time? Right? I mean,
yeah, it's super bullish.
Yeah,
because you don't want this thing to be over, right? I don't want it to be over. This is what it would look like. You just get, like, instead of our parabola being done early, you get a much longer curve. Like, it would just take, I mean, that's pretty ugly, but the general idea here is that, this just gives us more time to come back and test like other areas. So like, I don't know, it'd be cleaner if this just like rolled over here and we just we're out of here by, January, we're already going up again. But yeah, right now it seems like we're actually going to set up for like a break of the highs, marginally higher high, maybe 80, 90K. RSI gets, bearish divs on the shorter time frame. Stuff starts to break down. Maybe it doesn't take as long. Maybe it's more condensed, like something like this. And we get like a Fed pivot. Like, wouldn't it be poetic? You get that Fed pivot like right here, like right at the November, December, where typically we're bullish for crypto. Just something that confuses people and really throws a wrench in the whole 4-year cycle theory and starts to really screw with it.
Well, not to mention, you got people taking profits too, and then if it climbs back up, they're out of ammo because they thought that was the top. It has the opportunity to go even higher because of that. So
that's
right.
That's right. Yeah. Lots of other questions here. I don't know if you guys want to, if it's okay.
Yeah, well, if there's any that you wanted to get to specifically, we can. I starred one that we're going to get to anyway, and I figured we could bring it up when we're in the flow of that conversation. Yeah. But if there's one particular you want to get to, go ahead.
Yeah. So, you're right, and we'll look at this idea of this PulseChain sell wall. We'll look at that once we get into PulseChain here.
I saw a tweet about that the other day. I wanted to ask you about that. Well, first off, let me know if there's any other ones you want to get to, and then we can kind of just get into PulseChain.
Yep, that's good. So last thoughts on macro was that the dollar has basically shown its hand, and it appears as though it's going lower. So I drew this yellow line back in February of 2024. This idea that at best, the dollar would make a marginally higher high before breaking down hard, and then that would give us room to run for stocks and for crypto. And it seems like it's still on track, but I think on the monthly, let's see. So still got 7 days left in the month, but currently this is about to close lower than these levels, and that's important on a monthly time frame. That means that you're confirming a downtrend for a continuation. And then again on the weekly, it already confirmed here on this July 8th candle where it broke these levels here. So that's good for if you like your crypto assets to go up in value. This is the kind of action you want to see. And now the dollar is retesting that level, and two things will happen. This is a doji currently, closes in 2 days, so it's not done yet. Dojis are indecision candles. Oftentimes they'll go like this is a hammer followed by a doji. Oftentimes it'll break up. And so this could do this last gasp and then break down, or it just gets hard rejected here. And then we go lower now. So, I mean, does all this kind of seem like it all kind of sets up for bullish in the midterm for the cycle's not over for crypto or equities, I don't think. Yeah.
Looking good. Looking damn good to me. If you guys are here, and it looks like you are, and it looks like you're also enjoying this stream, do us a favor, hit the like. We appreciate Axis being here, and it looks like a lot of you guys are digging it. We are going to get to a lot of your questions. There's a lot of good, really good stuff actually in the chat that we're going to get to. Let's go ahead and turn our attention to PulseChain. So, I mean, finally, we've been talking about this double bottoming scenario with PulseChain for a while. and remember, like, bottoms aren't necessarily like, okay, did you hit the exact bottom that you had back in like August of 2023 necessarily? No, we got dangerously close. But I mean, we've been in this basically double bottoming range for a couple of months now, and we've seen some really bullish action over the last week or two that has been extremely encouraging, where we have Pulse basically at a 50% discount off of the SAC rate right now. PulseX has been absolutely melting. I mean, overall price historically is terrible. What I mean, in terms of expectation against Pulse and everything, it's been melting faces. It's been doing fantastic. We've seen, rotations from Pulse into PulseX and then vice versa. But PulseX basically at an all-time high. We talked against Pulse, I should say. We talked with you a couple of weeks ago about that axis. But wherever you want to go first, what are you seeing with PulseChain's chart? I mean, it's I think starting to look really bullish and turn around. But yeah, whatever direction you want to take it first.
Yeah, so the ETH ETFs was the first bullet point we needed to do and see, and so we got that, and so now we know that there's hundreds of millions of dollars flowing into the Ethereum space now, that's a thumbs up number one. And so leading into this, I mean, it was front ran on the 4 hour here. You can really see the kind of strength that came into the market here at these lows. PulseChain bottomed and did a 45% move over 9 days, 20 hours, that's a tremendous feat. It's a pretty small market still, but that's a nice movement. Let's see, volume wise, it did $15 million, which by the way is the equal amount as there is on the bid side. So there's $15.4 million of DAI in here, and this thing did a 50% move effectively with the same amount of money as that's in the bid side. So maybe it's a sign of things to come. If we did 15 million again, now you're at 100% off the lows, but it might even get easier to move. If that sell wall is removed, of course, we have to consider that now that's kind of going to act like additional pressure. As a matter of fact, I calculated that that sell wall, which we'll get into in a minute, it's actually a $4.5 million sell wall because, and I guess it's time to explain something that most people miss, and Sami missed this as well. I love you, Sami, but when you have a wall and it starts at a certain price and it ends at another price, the total value of that wall is the average of from the lowest price to the highest price. So if it starts at 3 million and ends at 6 million, like if it's worth 3 million here and it's worth 6 million here and it gets filled all the way through, half of it got filled from 3 to 4.5 and half of it got filled from 4.5 to 6. So your average is 4.5 million on that wall, not 2 million or 3 million or whatever we said it was. So yeah, you have to factor in the width of the wall and what the fill price will be, and then what the average fill price is for if the wall fully gets executed.
It's not always that simple though, is it, Axis? Because you may have so much at the 3 level, and then you've got an uneven amount at 4, and an uneven amount at 5, and then so on and so forth. So it doesn't stay static the whole way through, right? I mean,
correct. I'm talking about just a single position like this guy put down, which was like
I gotcha. Okay, you're talking about one.
When we're calculating global parameters, then yeah, you have to factor in everybody's walls, everybody's capital, all the ranges. Yeah, so then it gets a little bit more complex.
You're talking about one particular individual's cell wall.
That's correct.
Okay.
Yeah. Let me try to pull it up here, because it's important, I guess, to know kind of. It's not that much money when you figure how much volume PulseChain is capable of. We had like a $50 million day one time. Like it's okay, guys. Like it ain't gonna stop us.
Right.
See if I can find it. Is this it? Yeah, this is the wall. So you can see it's this huge wall, and it starts here at 20,000 pulse per DAI, and it ends at 8,000 pulse per DAI. So it's more than a 2x. So if it's $3 million of value here, and it's $6 million of value here, you have to cut it in half and assume that just this big brick is one guy, one position. The average price is a little over 4.5 to 5 million if it gets filled all the way through. It doesn't get pulled halfway. But oftentimes it'll get pulled, like, you get a little bit into here, it gets pulled, or it's like it's a bluff. So they'll put a bluff in here to try to suppress price, and they'll come in here, they'll look at it to here, and then they'll sell into it, and then they'll pull it, so that it's just acting like something to slow it down, so it doesn't just go vertical. A couple different thoughts on that.
Wow.
So yeah, I can't wait to just continue on because there's just so much in this pulse chart. I like the pulse chart against DAI, but like we want to know more about the data. So like, well, where else can we look to see relative evaluation, relative power in the pulse chart? Well, we need to measure it against its twin turbo sister Ethereum, and when you do that,
Right.
you get this chart. And so this chart, it made new all-time lows against Ethereum. So this is when you're measuring pulse in Ethereum denomination. This macro setup here. So this is all the data I can get on pulse in Ethereum, or pulse measured in Ethereum. It bottomed once in August, made a lower low again in December, made a lower low on the wick here in April, and then it bottomed out here on May 27th. And ever since then, it's built out this bullish divergence. It's massive, but it's subtle. And the only way to really tell is if I blow up this RSI, and you can actually see the slope is actually on a positive slope here. So we're in agreement, right? That's on a positive slope.
Looks good to me.
Yeah. So that's a massive bullish divergence that's forming where Pulse is saying, I'm better than you, Ethereum. Yeah, you might have taken me to new lows, but we're not done here. And so then we have to zoom in a little more and see, well, what's going on a little more locally in the price action. And a couple things happened. It's been range bound between this 7 zeros and a 114 to 7 zeros and a 157. Doesn't really matter. Yeah.
What was the date of that candle?
This bottom happened on the 27th of May.
Not long after the launch, 1 year after the launch.
That's right.
Yeah.
And you know, how poetic is that? So
There
this
you go.
range, this range is a
52 weeks.
37% range. So it's just, you know, it's ping ponging around inside of this 37% range. Inside of here, it created this descending channel. If it were created on like a post, it would look something like this, right? It'd be like a pole, and then you'd get the flag, but that's not what this is. This is at a bottom of in a range bound kind of position. So this isn't a bull flag, but this is a descending channel with a breakout and a retest and a wick back up and a retest and a wick back up. And here on the 3-day chart, this is actually printing a bullish hammer at the top of a consult. So this is basically bullish hammer, which you typically get at the bottom of a range, but you're getting it at the top of a range. And so this is consolidation below the top of the range, looking for a breakout.
Yeah.
So yeah, we're looking good against ETH right now. And that's good, you know, coming right off of the ETH ETF. And I will keep in mind, you know, BlackRock's got a lot of Ethereum, Grayscale's got a lot of Ethereum, but you know what? Those guys have zero PulseChain. So
Right.
that's bullish.
Can't
for
sell
us.
it. Yeah, this is definitely, and this is the chart that I think to be really paying attention to. I mean, yeah, you can look at the pulse to DAI chart and see that it's turning around, but I mean, this one is really the one to test your salt when it comes to being really any altcoin, I think, and crypto right now.
Well, I think also because the majority of our value comes from this, right? I mean, there's so much that has bridged over that's making the values that we have. That's why I think this is the most important one.
Yeah, so fucking A, let's give them more alpha.
Let's do it.
This started to happen on let's see here. I'm just going to show you guys on the bridge. I'm just going to show you Ethereum for a second. All these black bars, all this is Ethereum inflows. And you can see that we bottomed, W bottom, and we've made a new local high in terms of Ethereum on the chain. So if there's more Ethereum now, and that started, this is the key here, it started here on the date of, we bottomed on June 22nd, I'm sorry, June 22nd. So on June 22nd is when we started to see inflows of Ethereum into the chain. And now that's coming up and testing these local highs that we had back in March. Yeah. So there is actual value starting to build up on the chain, and it's verifiable. And you can add stable coins in here as well. They bottomed around the same time. So yeah, you're right that we do. ETH is one of our biggest liquidity pairs and our backing value, and as well as stables.
Well, it also helps that ETH can go up and down. I mean, the stable coins are the stable coins. They're not going to change, but as the price of ETH goes up, that value increases, you know, as well.
That's right. It pulls up the value of PulseChain with it.
Yeah.
And I'm going to pull up, well, we'll go through a few more charts first, and then I'm going to pull up when we get into the farming topics, like there's a pyramid that I made that shows, it's an infographic that kind of shows you how the architecture is, how the flows are important to the admins of PulseChain, and Ethereum plays a role, but not as big of a role as you'd think. But I can't wait to get to that part. So do not let me forget, if I don't show you the pyramid graphic, just remind me when we get
well,
there.
I want to say thanks to Crypto Elite for the $2 euros. We will get there soon, but I just want to say thank you.
Yeah, we do have questions about farming. We're definitely going to get to that here shortly. So go ahead with what you got, Axis. And I think after that we'll probably get into some PulseX stuff anyway, and then that'll make sense to go into the farming stuff. So yeah.
So all in all, what's the takeaway on Pulse is it looks like it's starting to reverse the other way. You got your bullish cross on the MACD back in early June. I've elaborated this for a few different parties, just about how, this was a clean, on the RSI, it was a clean break of the 30 level, but immediately bounced back up. And look, this is just huge strength coming into the market. And it's like, nah, we're not going oversold. We have good market makers on this chain. So, and then as well as on the volatility, it just kept getting squeezed all the way down, leading into that break up to the upside. And so this was all, you could forecast this ahead of time, I guess, saying it shortly. But yeah, this was all forecastable, and you would have been like way ahead of the curve if you were just following these three indicators. And so then, because Pulse is performing well, which is what everything relies on, now we can look at, PulseX, and it's made new all-time highs today against Pulse. So if you sold your Pulse for PulseX when the ratio was low, and you saw this massive double bottom coming in, good on you, because you just doubled your stack of Pulse. Great job, actually. But I don't think it's over, and we're not going to go straight up to parity, but inevitably, just look at the basics of the mathematics of the tokenomics. There's going to be less PulseX forever, and there's going to be, and Pulse will tend to inflate, especially during times of inactivity on the chain. So which one do you think is going to be more scarce long term? And where is the SAC wallet directing energy right now?
Well, it's crazy. We've gotten to 928 billion PulseX burned already in just over a year.
Yeah.
I find that we're almost at $1 trillion, and total supply is like 20 trillion. So 1/20th of the supply has almost been burned.
Yeah, so it says here on Cold Pulse that the precise number is 4.6% of the user supply has been burned, which is pretty incredible. If we can get to 10% burned by middle end of next year, that's how bullish is that?
It's crazy
for PulseX in the first couple of years. So yeah, I think just PulseX's rate of burn is just going to increase, because as the market goes forward, you're only going to get more volume, more transactions, more activity, more adoptions, which is going to accelerate the burn. So definitely is a trade where most of the market has now finally been made offsides. And what do we know about offsides trades on PulseChain? They always can make a comeback. So look for the coin that's hated the most. Right now, it seems like Hex is the dog. Yep. That's the one you want to be piling into. And they'll take turns through the whole cycle. So
yeah. Can we talk about the ratio, the PulseX Pulse ratio? And I know it's one of the heaviest probably pairs in PulseX as far as trading pairs go. And by Hart's law, how is it caught up so quickly? Is it just everybody going out of Pulse into PulseX? Or what's causing the ratio to get so, if we were at 3-to-1 there for the longest time, and now we're just over 1 point. I think it's 1.8 or 1 point.
It's under 1 to 2 now. It's the last I looked. Well,
it's like 1.8, I think.
Yeah, it's insane. And for those, just to real quick say, for those who weren't around during ratio trading back in the day, when PulseChain actually launched, coming out of ratio trading, for the first few weeks, I think it was 1 to 4 or something like that. So it was way further apart than it is now.
Yeah. So here you can see that PulseX is 25% heavier than Pulse, and for all and same for, actually, wait, that's way more than that. It's more than 25%. 30 million to 50 million. That's a big discrepancy. So it's like what, 30 to 35% more heavier. But because it's so heavily bonded to these two lighter ones, I think that's kind of why you're seeing it go up. It's also being bought and burned by the buy and burn itself. Plus the SAC wall buys it. That's the one it's been buying. So it's a combination of factors, but it's just more in demand right now. And there's less sell pressure on it. Whereas like Pulse is always going to end up with sell pressure because everything routes through Pulse to leave the chain. So it's got, Pulse is destined for more sell pressure, and PulseX is, most of the sellers are out relative to where we were day one,
right?
Where everyone was offsides that other direction. Now it's flipped the other way where they're offsides in the other direction, and everyone went to Pulse for safety. But now Pulse has permanent sell pressure coming in from validators or from shitcoiners that leave their shitcoins and then come into this with profits, and then they leave the chain with value, or the people dump their ink for Pulse for stables and leave the chain, with their rewards. Stuff like this is what puts constant pressure on Pulse, whereas you're just not getting that with PulseX.
Gotcha. Plus the buy and burn.
Plus the buy and burn.
Yeah, I mean, where would PulseX be without the buy and burn? I mean, I think some people are like, it doesn't matter. That doesn't, who cares? Like, it's just a narrative or whatever. I mean, I don't think it can be further from the truth. I think it's the single most bullish thing about it as a product so far. And of course, I think as the bull market goes on, we will see other things introduced for PulseX at opportune times. But I mean, yeah, where would we be without the buy and burn, Billy?
Good question. It would be rough. I mean, that would make this have no other function. It'd just be another meme coin at that point.
Uniswap, basically. Yeah, the Uni token.
Right. Yeah. So it's good that that it's got tokenomics baked into it.
Yeah. What's your prediction on some of those? I mean, we've got single side liquidity, we've got
limit orders.
Limit orders, you've got the governance, you've got
governance for ink. Yeah, that would be amazing.
I mean, there's so many functions that we could kind of say are set up and kind of probably ready to go. But just when do they get deployed? Do we wait till it's getting hot and heavy and then just
I don't think they get deployed until we're like 10x up higher across the ecosystem or more, and then we've retraced that move 70% or 50% or whatever it's going to be, and then we're starting to recover, and then those things will start to come online as we're recovering off that first major retracement. Yeah, it's going to be a while. It'll be next year probably.
I think that makes perfect sense. Yeah. Like why, everybody bitched about the single-sided staking when we were at the lows and everything. And it's like, well, why would anybody introduce anything right now? Like, in any market when you're down.
Why would we give you more of these tokens so that you can just continue to dump them?
Right. And why would we give our power? Why would we give the 5% of power users on PulseChain even more power over all the noobs that are on this chain? Like it's already easy mode trading. Like, you don't want to make it any harder on them than it already is, and totally discourage people from using the chain.
It's like the equivalent of like airing the Super Bowl at 3 a.m. or something like that. And everybody wants to see. Let's make sure nobody's watching it all. Yeah, but I like your call on 2025.
Did you recognize this super chat from Chris?
Yeah, dude, pull it up. Chris, dude, thank you so much. He's a huge supporter of the Solid Index and the boardroom and with accessalive.com, and
sweet.
He's been a super huge help. When I was away, he was able to tackle some problems we were having with the APRs on 2FUCK. So thank you for going ahead and above and beyond, and we appreciate it, my dude. And thanks for the super chat.
Yeah, we appreciate it.
Yeah, much appreciated, Chris. Thanks, man. Any other points you want to get to on PulseX, you can. I think this is great to start to get you to just mention 2FUCKs and stuff like that to get into some of the farming stuff. And we had some good questions on it too. And, you mentioned like, even though the prices are getting a little bit more bullish now, people have been sitting on their hands wondering like, well, what can I do? What if I don't even have any more money to DCA? What are the things I can do in the meantime? And we always preach on this channel, of course, looking into at least the PulseX pool on PulseX, that farm. And we've had some chat in the chat tonight about that and how most people, if they are LPing or anything, are opting for that. But there are other opportunities as well that some people are maybe a little bit more apprehensive to get into that maybe you could enlighten us to, not only on PulseX, but also on some of these other platforms as well. So Fast Abdul, thank you for the super chat. But yeah, I'd like to get your thoughts on that. And whenever you think it's time to, I want to pull up a question somebody had about that PulseX pool, because I thought it was a great question for this.
Sure,
topic.
Let's start with that one.
Yeah, let's go to that. Here it is, I think. Yeah, so digital money markets. I'm currently farming the PulseX and Pulse on the Pulse. I can't see what that symbol is. My eyes don't work.
Pulse farm.
Okay. Long-term speaking, is it better to hold that liquidity pair or hold PulseX in my wallet? Thanks for the stream. So I think he's just saying, like, what if I just hold PulseX liquid versus actually farming? So I'll let you start there.
The APR that you're making right now, like, let's say if the size of your bag does matter.
Yeah.
Let's say you had 10 grand in here and you're going to leave it in there for a year. That's your long term. It's only going to produce you 500 ink, which you could purchase today for $1,500. And when you're looking at the impermanent loss that you could get if PulseX goes to parity, I mean, you're going to lose half your, you won't lose half your stack, but let's just do a quick impermanent loss calculator, because it'll help us actually know what actually would happen. So if coin A goes up 100% more than the other one, or double the other one, I guess the impermanent loss isn't too bad. So if asset one goes up 200%, that's PulseX goes up 200%, doubles up over Pulse, then Pulse only goes up 100%. You only get 2% impermanent loss, so it's really not a huge loss. That's smaller than the 500 ink you'd earn.
Right.
So I don't think it's that big of a risk. That's the least risky pool. You didn't
include if the price of ink goes up in the meantime.
That's right.
As well, which we anticipate that happening. So
that's right.
As well as the APY fluctuating. I mean, we've seen it go from like 13 to 25%, ranging kind of. So
but we can go back and we can look at, what actually happened from the lows here. So from this low here, assuming you went into the farm here at the very bottom and you held it to the very top, 1,072% is 11.7x. And then what did Pulse do in the same amount of time? $520. So it ends up being about 5% impermanent loss. So if it was 10 grand of value, and it's kind of hard to explain, but so that means that $5,000 of your value was in PulseX and it went up 1,000%. So $5,000 times 1,072%. It's 53,600 bucks. This is assuming you didn't go into the farm, and the other one would be 5,000 times 520%. It's 26,000 bucks. So now you have to add these together. 53,600. So your total here is, your net is 79,600 to stay out of the farms. And then you have to figure, if you times that by your 5% impermanent loss, you lost $4,000 in impermanent loss, because part of your PulseX value got converted into Pulse on the way up.
Right.
So what that looks like is, 75,600. 75,620 plus your 500 ink. And your 500 ink, let's assume it did the same move, although this was on a shorter time frame, keep in mind. And plus we're assuming that you got in at the bottom and got out at the top, and you sold your ink at the peak price. So there's a lot of variables here, keep in mind. This is a absolutist viewpoint. But then your 500 ink would have went up 4.8x as well. So whatever that was, that $1,500 times 382%. So you get 5,730. Your net is you made $730 more profit than you would have staying out of the farms.
Staying in it, yeah.
So it's marginal. But this is
Yeah.
assuming that you did the best trades.
Which you're not going to do.
Which
Yeah.
no one does.
Yeah. The great comment from Fast Abdul, and hits the nail on the head. What do you do with your yield token? I mean, that matters. So, I mean, yeah, some people are just going to hold ink. Other people like to peel off the yield and put it back into these exact tokens and just keep the machine going. Some people like to pull it off and get into riskier assets for leverage on PulseChain. I mean, yeah, talk about that too, because I mean, yeah, you don't necessarily have to hold the ink. I mean, I think it's one of those things where some people are extremely bullish on ink and think that RH has a lot of plans for it and things like that. Others are just like, hey, it's like this ecosystem's cake token, and I don't want to rely on it pumping incredibly hard. So yeah, what do you make of that? Because Fast Abdul is right. I mean, yeah, you could do a bang up job with your yield if you want to. So
what you do with it is up to you. There's like a ton of things you can do with your ink yield. I think, what I would do with it is I would just hoard it, because like last year was the year for compounding. This year is the year for holding it liquid, or and trying to basically sell local tops into things that other bets you want to make. There is an element of this game and what that might look like is you have a couple altcoins that you like. So for example, I'll roll this into Communist, because somebody asked a question of, I've been told that COM is extremely scarce. How is this possible when $10,000 can buy nearly 500 trillion plus COM? I can't wait for this question, dude. This is the best question.
I was just gonna put it up, but yeah, if you're, let me know when you want to get into it, and I'll.
So
I'm not finding it right
this
now.
is one of those opportunities that I think like is gonna miss. Most people will miss it, and the reason why is because most people don't understand that COM is already up. It peaked out at about 95,000%, which would be about 1,000x. It almost did almost 1,000x already. Currently, it's up 33,000%, which is like 3,319x, and it's just getting started. Most people don't understand why. But yeah, this would be like one of those side plays that you could make, is on a coin that, after I try to explain why this would be a good trade, somewhere you might want to take your ink to try to outperform the gains you get on ink. Mm-hmm. So, yeah, personally, I think ink still got good upside, and it's kind of a shoe in at this point. So like to give away your ink at $3 when it's already hit 10 very early in the cycle would be, I think, kind of foolish, but to take portions of it and make bets, I think is okay. Yeah, it's up to you kind of how you want to go about that. But back to the Communist thing, like, well, how can something with so many units be so scarce? Well, what if I told you that one quad is currently $26,000, and there's only 140 of these things out there. 140 of these quads out there. That means that, the total value of this entire market cap is only a 2.4 million fully diluted value market cap. So and by the way, when it was down here, this was like 600K or 800K or something market cap for all of those quadrillions of COM. So it's not so much about the number of units, it's how accessible are those units and who holds them and what's their intention. And so I went ad nauseum trying to explain that COM only inflates if people stake their HEX for a really long time. So the only way you're getting COM from fresh inflation is if you went and you bought HEX off the market and you staked it for 15 years. If you did it for like 10 years, you're getting a ton less COM. Like you're not even getting a meaningful amount at all. You have to go max length to get any meaningful amount of COM. So that means that it actually makes more sense right now to go to the market and buy it, because it's so undervalued relative to the cost to mint through staking long. So then, and this gets into this concept of where the incentive structure comes from for COM, which is based on where does market efficiency meet marketability? And this idea of automatic marketing for HEX. Like if you get paid back, 20%, 50% of your HEX stake value immediately when you go to stake for 15 years, that's a pretty good incentive to get you to stake longer. If it's only 5%, then that's not as good of an juicy of an incentive. which is why you're seeing players come in here and just buy up the supply to increase that rebate to make this market. And so when you go into this block scanner and you actually look at how many people hold these things, that are, you know, a significant amount of them. A quad is 1 quadrillion, which is 1,000 trillions. So hang in there with me. To get in the top 50, you only have to have 500 trillion. So it's still, you know, you're still capable of getting in there, but most of these quads is held by these top like 25 wallets. This guy's got 12 quads. This guy's got 5.3. This contract has 5.3. You know, 4 quads, 3 quads, 3 quads, 3 quads, 2.5. And then by the way you're halfway down this, there's only a few guys, the quad father class, that has a quad or more, which is about 25 grand right now. But that was $5,000 just a week and a half ago. And that shows you how fast the com price can move. So, you know, from here to here, that was like a 240% move or something. And this is measured in hex. So if you wanted to 3.5x your hex, you could have done it over the last 10 days by leveraging the power of com, because it was been so undervalued and misunderstood in what the goal is here.
Mm-hmm.
What happened to all the talk about it? Was it Johnny Sachs?
Well,
it was
Johnny,
really
Johnny stepped away for a while because he was, you know, people
burned him out.
Well, people just needed time to really absorb the information, and most people they quit, right? So like this was like the peak of people talking about it, and then this is the flush of the new inflation, and then eventually it just bottoms out, and then there's no one left to sell. And look at how it perfectly made a price floor at a higher low. So it's a technical marvel too. All that supply basically was given away for free once you get down into these levels. And now, like, you know, you could it allowed some smart market maker or some accumulator to accumulate all of that supply up. You know, this is a huge range. This is like a 380% range. So I mean, yeah, 23%, 440%, but in the other direction, it came down like 80%. Right. Remember, I'm viewing this in hex terms too. So what an opportunity to multiply your hex. Yeah, went down 81%. Well, so why do people get quiet on it? Is because smart money like let the chart bleed, and then now they're able to get it all back for nothing, right? And so more times you let this happen, the less chance of sellers can push it down farther without going and buying hex and staking at 5,555, because otherwise you're just not going to be able to get any coins.
Right.
Do you think also, like, just kind of the, you know, talking about hex and hex staking this cycle getting like increasingly less popular when it was all the rage last cycle? I mean, do you think that's just kind of it too? I mean, I think as you're seeing with com right here, I think we're going to see the market kind of come back to that. I mean, we're seeing hex, the actual new PulseChain hex, bottom out right now. You know, do you think we're going to just see that, like you just said, like sellers just get exhausted at some point? At some point, the market has to come back for this, and especially with these other long-term things happening, Bitcoin ETF, ETH ETF, going back into like, okay, crypto is not going anywhere, and people returning to that hex staking, mining, whatever terminology you want to use, mindset, you know?
Yeah, so this kind of folds nicely back into our conversation about farms and what is the reality of the farms, right? And so I'm going to pull up this chart now. Hopefully I can just drag it on. No. 1 second.
If you guys are enjoying the stream while we wait, smash the like. We appreciate it. We're going to get to some of your other questions. I know there's some other ones in there. We appreciate the super traps, super chats, Salt and Triple X. We'll get to you, man. Appreciate it, guys.
So this is a good visual and I made this today. So I'll bow at the end of the stream, but it's super important, because what you guys need to understand is, like, why is hex staking? Why is there still an opportunity there? Well, part of it is because of this model. So when you go to the farms and you're looking at these APYs, if you click on like one of these calculators and you click the drop down to go into the details, you see at the bottom here where it says 100x farm multiplier. Well, I've taken a look at every single one of these farms and I've broken them down into this pyramid, and the pyramid shows you the multiplier bonuses for each farm. So what is Richard and the admin team really incentivizing, and what is the base floor yield that you're going to get. And the base is coming from your major 3 coins. It's coming from PulseX, Pulse, and Hex. It's coming from the PulseX Pulse pair, and it's coming from the Hex Pulse pair. And this is just the base multiplier of 100x. For, don't get too caught up in the 100x number. Just know that that's your foundation of which the whole chain is built on. Right. This is, a lot of your liquidity is in this PulseX Pulse LP pool, and it's only earning you like 13% because it's got the smallest bonus multiplier, but it's got the most liquidity because the most liquid pairs this is the most liquid pair on the entire chain. So it was important to create that nice base with lots of units, so you could effectively come in and out with millions of dollars of value between Pulse, PulseX, Hex, and Ink. And so, okay, this is your base, right? These 3 coins, Hex and Pulse, PulseX and Pulse. And I think if you're just looking at this setup right now, PulseX and Pulse is paying 13.7%, but Hex and Pulse is paying 30%. And the reason is because there's about double the amount of liquidity in the PulseX Pulse farm in dollar terms as there is in the Hex Pulse farm. And so a couple things that I notice here is that, well, this 30% APR that's on the Hex Pulse farm, that's coming in close to what that quoted 30 to 38% APR on long-term Hex staking is, right? So it's like right around that kind of number. So that falls in line with what to expect from Hex. And then the PulseX Pulse is just your lowest yield that you're going to get, but it's the safest with the least amount of impermanent loss because they really are going to ride up and down together for the most part. Then next on the list is the second tier, which is these 3 farms are given 150x multiplier. So you get like a 50% increase in the yield that you're going to get. If you go into the USDT, WETH, or USDC Pulse pairs. Notice how all these other pairs on here are Pulse denominated, except for this one, the Ink PulseX, which is a very unique and important pair in all these pools. But yeah, so these are incentivized because we really do want stablecoin liquidity on the chain, and we do want to have some sort of connection to ETH because that's where our home is, right? Our home is on ETH. That's where all the liquidity is. So there needs to be a connector point to bridge back out through to get WETH bridge back in and out of the chain. So this is the second most biggest multiplier. The third biggest multiplier is the Ink farms, and the reason why I think these are so high on the pyramid is because you really don't want people to just take their Ink yield and dump it. You really want to give them incentive to put that against Pulse and PulseX as a reward mechanism to earn more on your yield, so that there's a looping effect. This is the pool. These are the pools that you're really looping value back through the system to really build a huge liquidity base and give people like a hefty reward for doing so. That's, you needed to have something a little bit juicier than this stuff down here to convince these guys not to dump their Ink for USDT, WETH, or USDC and go into this pool. If these were reversed, you'd expect that people would do that. But because they're putting Ink on top, it makes sense that, okay, the APRs are decent enough higher that you're going to keep people looping their value back through the system. And then on the top of the pyramid, obviously we have DAI with a 400x multiplier. That's 2 times better than the Ink pools. And this is important because this is what gives us stable pricing on the network. You need to have some superior stable coin value on the chain to really stabilize the pricing on the network.
That makes a lot of sense, and I like this breakdown. And I guess that would be the question: is like if you were somebody getting involved in some of this, like we already talked about, like obviously your base at the bottom, the PulseX Pulse pool is really the most safe one. But what would be your kind of this looks like Maslow's hierarchy of needs kind of, but like what would be your like plan if you were getting into this and you like hadn't really done LPing before? Are you trying to make your way up this pyramid necessarily if you can? I mean, a lot of people aren't going to have the positions to do some of these things, you know what I mean? So it's a little bit tougher with some of them, but is there necessarily a plan to like get up the pyramid, or is it just more of an illustration of like this is why the reward structure is the way it is? Because I like what you just said. Like you want to create an incentive for people, no pun intended, but to keep the incentive token and then just keep earning it again. So I know I've heard Corey Geary talk about he was in that Ink PulseX pool before and started to get wrecked a little bit with impermanent loss. And him and Dane, I've heard like they're like not into any LP positions after that. So
Corey
that's one
just
extreme take.
Corey just came clean that he's back in the Ink PulseX farm, but he's got a clear cutoff level.
Okay.
And so that's what we'll go into now. So if I'm looking at this and I just got a couple $1,000, where would I put my capital? I wouldn't put it in the DAI Pulse farm, because if the price of Pulse moons, you're going to lose all your coins, and you're going to be left with stables in the middle of a bull market, and that's no good. No, leave that for the guys that have hundreds of billions of Pulse to provide there, because they don't care with what they end up in. They're set anyway. So let them do that one. But the ink farms are where I've been directing people, because I don't think that there's enough meat on the bone on these two lower. This is for whales down here on the base, because if you're a RH Maxi, you don't even care if you end up with more PulseX, Pulse, or Hex. Like, you like them all. So like, you're just coming in there with like 6-7 figures, just trying to like take the least risk and get more of all these coins, and just earn that ink for at whatever rate. And then, whereas like, this ETH farm, if you like ETH and you like Pulse, I would stay away from USDT and USDC. That's just my opinion. But if you like Ethereum though, and Pulse is going to go on a ripper, well, theoretically, you could go into this ETH Pulse farm and get paid ink to DCA out of Pulse and into Ethereum if Pulse overperforms. And that's what this chart has been saying, is like, Pulse is about to overperform and go up here and test 36% higher. And if it goes all the way back up to the highs and makes new all-time highs, I mean, that's a 300% move over Ethereum. You could end up with a decent sum of Ethereum, and that comes in the form of impermanent loss, right? But that's where you're playing impermanent loss in your favor. So bottom of the pyramid and top of the pyramid is not for like 99% of people, I would say. It's just for like the big whale players. And then until the last third of the cycle, and then we can start to look at that DAI pool. But then ink is like where I've really been trying to focus people. And so then I think it's probably important to just give you guys some context on how to avoid impermanent loss. And one, obviously you can look at this chart and you can see that there's two major, well, let me say that this is ink measured in Pulse. So right now we're at about 60,000 Pulse for an ink. It was as low as 8,000. So ink has went up 600% against Pulse. But these are the periods that you got to try to avoid. Is you don't want to be farming during these vertical price moves in either direction, because if you were farming here, I mean, it could have been devastating as well if you weren't big enough.
Yeah,
and you could end up with all ink, and but you could have made ink the whole time and then rode it back up too. So I don't want to poo-poo longer term farmers, because that is a valid strategy. And Crispy Man from hexfire.io goes deep into this strategy in his paid group. So if that's something that you want to know more about, go check him out. But generally speaking, like if you're coming into the farms now, you're trying to avoid these breakouts where you break out of a range. And you can see that this was in a range from January till February, and then it broke out. And now we've been in a range from mid-March all the way till today. And it looks like we're getting to that point where we're going to break out, to me. Because we're coming on the reason why this is different now than it was back in these past periods is because during this attempted breakout and this kind of move here and this kind of breakdown, is the difference is that Pulse is strong now. Pulse is actually moving, and it looks like it's bottoming. So it's ripe for we can say the bottom's not going to fall out on Pulse. That's good. Okay, so now the ink can overperform, PulseX can overperform against Pulse. That's what this chart's saying. So wait these range periods. So breaking out of this range, you don't want to be farming yet. So what I think might happen, and I could be wrong, is we're going to break out of here and we're going to go up quite a bit, and then we may start a new range at a higher price. When we finally find a bottom off that and start that new range is where you want to set your LP position at that point. So, and finding that and being ahead of that, that's like why you'd come to like my group, is because we'll help you discover that early. So like I've been telling my people, like, be prepared to, if you don't want to deal with impermanent loss, to pull out going into this breakout. So I actually thought we were going to break out on this move here, and it didn't happen. So I was out a little early, but just a couple weeks later here, it looks like we're about ready to do it. So I was just a little bit early on that call, but
better early than never. Yeah.
So
what's your thought? Okay, go ahead. Go ahead.
This is my last piece, which is like, okay, this is Pulse and ink. and this one pays 10% more than the PulseX ink farm, but the chance of impermanent loss is a bit less on the PulseX ink farm. So this is that farm now, and you can see that it's been stuck range bound quite a bit longer now, and it actually ink actually broke down, so you actually ended up with a little bit more ink, and it's giving you more time to farm inside of this bigger macro range. So I would look for a break of this resistance line first, and then like a close above it, and then you'd want to pull, because potentially it could just start to go, ink could really start to overperform for a short period of time. But PulseX ink has proven to be much less risk of impermanent loss.
I think that I just wanted to say this, and I'll let you go, Ewok. I think that shows that the biggest thing you said about, we were talking about using Corey as kind of a vehicle for somebody doing impermanent or LPing like that. And I think that is the reason to have like a long-term mindset and a long-term plan like that. Like if you have somewhere marked out on the chart, like you just said, like this is when I'm going to exit this. I think that's parameters you do want to have set from the get-go. So yeah, I like that. I just want to say that. Sorry. Go ahead, Ewok.
No, you're good. At the same time, though, my thought with some of these is if you're going to leave them in there and park them, and you're not going to play that game, because you can make mistakes, just like trading, it's going to even out in the long run. If you're okay with leaving it there throughout a whole cycle, you're going to see it go up through all these ups and downs, and then you're going to see it come back down where it probably will even right back out. So, which is, I mean, I think that's the safer move if you've got the capital to leave it, right? That way you're not going to make those mistakes. You're not going to get in and out at the wrong time or miss a channel that could last months because you got out too early, where you could have been making yield the whole time.
Mm-hmm. And if you're a big enough player, you can be losing out like many 5 figures, by taking out. So, Crispy did that analysis, and as long as you don't compound your ink back in during this period of the cycle and you hold it for a year, you actually end up overperforming slightly. Yeah. Yep. We made some assumptions in that analysis, but generally speaking,
right.
Good stuff.
Cool.
Yeah. Oh, go ahead. I was going to say, did you want to talk about any of the other farming opportunities like on the other platforms? Because people really don't, I think, talk about them very much. And I will say, around 8 o'clock Eastern here, or a little after, I may have to bounce, so I'll play it by ear. But
we can we can touch on those briefly and then close out. We've been going for we'll go cut out at the 1.5 hour mark. So so if you guys want more of this, like this is what I do every day for my members, and just try to break down the ecosystem for people to give them an edge in the market. Go visit accessalive.com. I know a lot of you guys have been following me for a long time, so where to get the goods on X and stuff. I've been posting again.
Well, I think you just showed a lot of that, like for free right here, right now, like a lot of that value right now. I mean, I love that pyramid idea. I was going to ask if you could send it to me, but I'm going to be editing these clips. I'll just snip it right out of there.
I'll make a tweet and send it to you and stuff. And that way people kind of get an idea, because like if the farms change drastically, this whole entire structure changes, right? And that can change the entire flow on PulseChain. So it's important that these kind of stay steady for the time being. So what was I going to say about final thoughts on this? Oh, about this concept of the base of the chain. At some point, either because Hex price goes up a lot or because the farms dry up and they get overcrowded, Hex will become the more attractive yield option at some point in the cycle, naturally, because it'll get a free ride on the ratio. But if any bid comes into it, it's going to overperform because it's got less liquidity, so it'll spike higher, and it'll give people a reason to stake short to midterm to get yield that can compete with the yield in the farms. So I don't know if that happens in 6 months, 8 months, 12 months. Some point this cycle, there's going to be this reshift or this massive momentum shift or rebalancing that occurs where the Hex gets the nod. Right now it's the ink farms, but eventually it's going to be the Hex is going to be at least match similarly the yield that you can get on a like a 6 month to yearly basis, I presume. That's my speculation. So take that for what you want.
I kind of speculate that too.
Yeah. Makes a lot of sense.
I do think we're due for a shift in what the better yield is, and Hex has been way too quiet for way too long.
Yeah, it's gonna have a huge rebound.
Yeah.
So this is 9-inch. I like the 9-inch guys. I have a working relationship with them to some degree. They've went ahead and they have their own exotic farms here. Like when I call them exotic, it just means they're not RH core coins. They give you a little more flexibility to do things with your altcoins. Obviously, they have a lot of 9-inch pairs. This one here, 9-inch die, is paying 75% in BBC yield, and BBC is way down in price. So like being able to capture that many units of BBC now at the lows before it goes on a huge ripper is probably a valid strategy. As you'll see, like with and this is going to hone in on the idea of Inc. and BBC and 2Fucks kind of all being the same levers on the chain in terms of rewards. The difference being that 2Fucks gives you governance capabilities and voting rights, and BBC and Inc. still don't do any of that. So they're basically, the utility for those coins is that you can make more of them with themselves. And like I would direct you to like the BBC Salad X farm or the BBC Axis farm or the 9-inch Fire farm, for example, is different things that you can go into in terms of the Salad Index, which is like my home team. And other interesting farms, like look how they paired up BBC with Inc. so that you take the two reward tokens and pair them together, and now they can run up and down together as they perform in price. And I think to get you excited about the opportunity, I have to show you the BBC chart. If I just remove drawings and turn it on regular scale, this is what you're looking at. This chart looks flat as a doornail. And this is measured in pulse terms. If I click log, though, boom, you get some resolution. BBC went up 38.9x against pulse in 25 days. And it only took $295,000 to do it. And so not only can it perform really well to the upside, and it's proven that it did better than Inc. did, but it's also got enough liquidity pairs that you can actually move into like 9-inch BBC has almost $1 million between it. And then 9-inch Pulse has 640K. And then that's got the 400K of DAI paired with it, 400K USDC, 450K of USDT. So if you do experience, a massive 5-figure swing or even a 6-figure swing, it's not like you're stuck in BBC and there's no exit, or you can't get into other things. So I really think that people are overlooking the 9-inch platform. And especially if you're a fan of like the Axis token or some of these other more obscure like side plays or sub ecosystems, there is meaningful yield over here. Not only just in BBC yield, paying 44% in a coin that's down 80% against Pulse, but it's also paying you like LP rewards as well. So you're compounding, you're getting more BBC and more Solid X with every trade that rotates through your liquidity. So yeah, this is a unique platform, and they do have options as well on the P farms as well. So they got Pulse PDAI, Pulse Wrap BTC, the forked copy. And so
wait a second. So you're saying they're getting the benefit of V1 and V2 together?
That's right.
At the same time.
You're getting, you're getting your incentive coin plus you're getting the LP looping. Yeah, it's making you more.
I just wanted to make sure people caught that.
Thank you for clarifying. It's not to be understated. Right.
Not
only are you getting 40 to 80% APRs paid in a coin that's down 81%, that's proven it could do a 39x against Pulse, but you're also getting, LP rewards looped back through. So if you own any of these coins, some of the P copies, any of the hexes, there's an E-hex. There's even an E-hex farm over here that's paying 27% here and 15% here. There's places to go with your, I'm sorry, this is hex. This is E-hex. That there's places to go to earn yield that can outcompete short-term staking for hex. Again, and also with the solid index coins, this is utility. This is a way to, this is earnings potential. This is profit to earnings ratios that you'd see in dividend stocks and stuff like that, where if you're going to base your investment thesis off anything, why not base it off of the actual earnings you could get, the earnings potential of an asset, not just rely on price appreciation. No, I think we've proven that with Axis, it could do tremendous price appreciation, Fire as well, Solid X as well. But also you can earn on them in the BBC farms. So yeah, super huge opportunity over here. Look at Atropa's paying 21% in LP rewards. Well, why would that be? Well, that's probably because it's got this deep liquidity web, and these ARB bots are flooding through the Atropa pairs at all times because that deep Atropa PDI pair, and that they have so many connected pools that this thing is spitting out volume like a buzzard. And it's just like, you know, so there's different plays for different ecosystems, and,
Right.
and you know, it's amazing to just, you know, have these opportunities. We should be thankful that they're there, and they're being completely overlooked.
Yep.
Yeah,
And
I think that 9inch has done some of the. I think that it is one of the most overlooked things that we have going on PulseChain. Honestly, I think what Hexy Bastard has done, like just checking out. I think people like judge the guy based on appearance and seeing him, I think, drunk on a stream one time or something like that.
oh, he's obnoxious as all hell, and I'd tell him to his face. But it doesn't take away from the fact that they have a tremendously amazing tool over there. I didn't even get into like the DCA tool that they have, where you can like have this thing automatically DCA into positions for you.
Yep.
Yeah.
Limit orders. By the way, their dev is a goat. Kino, he's amazing. Like, he's super skilled, and he's got this stuff. The only thing I would say, like, maybe if you're going to do V3 right now, 9mm seems to be the place where the liquidity is, but that may change over time. But I mean, they got DCAs and limit orders, and then other tools, like you can deploy tokens, you can deploy airdrops, and other things as well. So yeah, definitely bullish on the 9inch platform.
Yeah, that DCA tool is pretty cool.
Yeah.
And then lastly, you know, I think this place has a fond place in my heart. It's the 2Fux platform, which leverages the power of Fux.io. So this is like built on top of Fux.io. I mean, said briefly, like, Fux allows you to put not just 2 coins against each other, but you can actually connect up to 8 coins in different like weighted percentages in these pools. And so people have thought of like really creative ways to put these pools together. So like one of the most obvious pools that needs to exist is like a stable coin pool, and that's like top of the list, right? Is like these bridge stable pool that's got, you know, USDT, USDC, and DAI all in one place, so that they're interchangeable and they help stabilize each other's peg. And then, you know, they earn an APR for providing that liquidity. And then you get like all the RH coins in one pool, or you know, you go down the list, and these pools are paying out anywhere like 40%, 38%, 37% here on the base layer. But what 2Fux does is it takes all of these gauged pools, and it takes all the Fux, and it bricks it into the platform so that everybody's got the power of a whale bonus. So it takes that maximum whale bonus of a 2.5x and increases these gauge pools even further. So if I click on the 2 solid pool, we can see that it says it's paying anywhere from 12 to 28% APR on the base platform if you take your LP token and you stake it. But if you take that token over to 2Fux and you click on 2 solid pool and you put it in here, like, look at these APRs are 53%. So I mean, that's an additional 20 some odd percent, because what's happening is it's taking all of that voting power from VE-Fux, and it's putting it into one. It's the protocol is treating it like everybody's sharing the whale bonus. And so whoever has the 2Fux is the guys that gets to direct energy at the pools that they like to give them boosted yield. And this boosted yield's paid out in 2Fux and Fux and Prime Fux in some cases. So it's like Prime 2Fux. So it's like, man, the yield generating opportunities with Fux and 2Fux is pretty incredible. And you know, if you have a cool pool idea, but you don't have any 2Fux, well, eventually you're going to be able to rent voting power from the guys that do have it through this protocol called Bribery. So this protocol is a bit deeper. It's an infrastructure layer play. It's early, so it's like there's still a lot of meat on the bone. And I mean, right now they have 70.6% of all of the voting power in Fux locked in here, shared amongst all the 2Fux lockers who are voting on pools.
Wow. I think that these need to be highlighted for people because they just don't know that this stuff is out there. And obviously, like, the amount of opportunity is ridiculous. Like all the polls that you just covered right there, I think is insane. And I was wondering too, like, have you mentioned 9mm for a moment there in V3 and everything. Have you done anything on 9mm? Are you familiar with any of the polls or anything that's going on over there?
I think 9mm is awesome.
Yeah.
I like using it. I think V3 is an important piece of the pie. And so, yeah, I use 9mm regularly. It gives you, this is more like an expert tool, I would say. And not that not anybody could use it, but just like to get the maximum efficiency out of it, there's like a certain skill set that that you can deploy to get different outcomes. I don't want to go too deep because we're running out of time, but like, yeah, this is another place that you could take your 9mm tokens and stake them for yield. But this gives you the flexibility to kind of DCA in and out of a position and set ranges that you're comfortable playing in. So like, as we said before, this guy here that's got this big brick of liquidity, this guy clearly, is saying like, I want to be filled,
You've said a lot of "that's what she said" comments tonight. I held tight on the last one, but anyway.
Oh boy.
I think he walks back. He rebooted. He's back though. Anyway, go ahead.
Yeah. Well, just like, yeah, this is a tremendous tool for basically DCing in and out of positions, and it's really, really useful for market makers. And that's about what I'll say about that. But yeah, I like this a lot. Yeah, I do.
Yeah, kind of the Tangang decks. I know a lot of people use it for trading those coins, obviously, and stuff like that. So, any kind of final thoughts? There wasn't really any other too many other pressing questions in chat. Somebody just asked for a general price prediction for PulseX for this bull market. I mean, we do price predictions are one of those things that I'm not a huge fan of because nobody's going to get it exactly right. But I guess like to leave off real quick, maybe there's not a quick way to do this, but just kind of time wise and performance wise, where do you kind of put this ecosystem? I know you're a fan of the, topping in early 2026 type scenario, but yeah, I guess time, price, where are you kind of with this ecosystem right now?
Well, it'll top after Ethereum tops. So let's watch Ethereum. The Ethereum top could be anywhere from next May to August or September. Like next May to August, September. There could be potential for that's the end of the cycle. But if it's not then it actually pushes out an additional 6 months, I think. So then you get like, I'm sorry, it goes out till the following spring. That's kind of where I'm at.
Okay.
But that's I'm going out on a limb here saying that type of stuff right now. So I guess I would play it safe and just assume that your top's going to come like next fall, just to be
right.
That way you're good 3 months before, 3 months after, and you can kind of play it by ear. I'm not going to give away the playbook, but yeah, there's definitely opportunity for us to end the cycle a little earlier than usual. If this thing goes parabolic and everything I said early in the stream about sideways and dragging price action doesn't happen, then yeah, we're going to blow off, as early as next May, June, something like that. So, but I hope I'm wrong and I hope it goes longer.
I hope you are too.
Same. Yeah. Do you have any feelings about PulseChain, PulseX prices? I know we had a very popular stream with you just a couple of weeks ago where you talked about PulseX potentially reaching parity with Pulse. Frank Molina, shout out to him. That guy basically shouts us out in this channel everywhere he goes. So shout out to him. We value his stuff. He had a great stream with Matty Allen last night. He's doing his own channel now as well. But he really liked that concept. I mean, who wouldn't, of PulseX reaching parity with Pulse? But yeah, just kind of your thoughts on that and where those prices could head this bull market.
Yeah. Yeah, I think Pulse will hit 0.001. So that's up here. Oftentimes you'll hear me talk about, even getting a 10x off that. So you'd get a penny. It doesn't look as good on log, or it looks not so hard to get there on log. Let's see, where is a penny here? Right here. So I think that's like it's like 227x or something. I think it's doable. Yeah, 203x from here to a penny. And I mean, a lot of that, there's a lot of factors that's going to happen that's going to make that even, Richard's so good at building hype and momentum, and then when the liquidity starts to come to this chain, it's gonna, like, if you're a degen gambler and you see $500 million go to PulseChain and the prices are kind of just starting to build up. Like, are you not going to go over there and try to capture a little bit of that?
Right.
Just even if you're just going to go after one of those 500 millions, just 1 million, you know, are you
Even
not gonna,
if that money goes there and does nothing, wouldn't you want to front run it?
there's going to be a cohort of people that will, which will build momentum, which will build hype. It's going to happen. And so I don't see why these like upside Fibonacci targets don't just get blown out of the water. Like this thing's going to do the incredible things for price. And it's just a couple things need to line up for that to happen. So yeah, low side target obviously would be like, you know, 001, which would be like a 20x from here. I think I think we can get to 001 this year. And then probably start like a massive sideways range. So what does that look like? I don't know, something like this, and a little bit too fast or too slow. Say like we get up here by November, and then it's just like Hex. We just spend so long consolidating before breaking out to higher levels middle into next year, and then that's where you're really going to get the massive move higher. So you know, it could easily build up. It could literally just be like Hex did, where it just like kind of did one of these. And then boom, you're at a penny, and then that's the cycle. So,
right,
this would have us, you know, I mean, we'll be doing this probably. It seems like 2026 to me. I'm happy to be wrong. So yeah, I'll be wrong about that. But when it happens, then I'll be right.
right, yeah. I think that's incredible. And I think some people like, you know, and I understand it. I get why people are disillusioned over the last couple of years, not just in this ecosystem, but in others as well with crypto. Why is everything else going up with my stuff or whatever? But I think people fail to realize that, like, especially if you haven't been around or seen other cycles before, that like things could look like the year 2025 could look not just different from what things have looked like for you in this ecosystem and just kind of how, you know, you as an investor may be interpreting and seeing this ecosystem. But I mean, it looks like an entirely different thing possibly next year than anything we've seen since 2021, essentially.
You know, if you get good resolution on Richard's case, I don't see why he wouldn't just come in and just pump the price like crazy, just because he's so happy and excited that he made a big win for DeFi. Like, wouldn't you just pump the living shit out of your chain as a celebration? Yeah.
I don't want to get too deep into this, and I know we kind of have to go, but will the hearing matter to reach that high? I'll let I like you guys give your thoughts. Me and Ewok have explored this a million times. I personally, I think the timing of when certain moves could happen could be influenced by the hearing, but I just don't think the SEC carries any weight in the public's eye whatsoever anymore, especially when it comes to crypto. Nobody takes them seriously. There was just a report the other day, we didn't even talk about this, but the Gensler may be out by next year because of Biden stepping down, that may have something to do with it. That's not been totally substantiated, but all these things, I mean, even with him there, even if there's a settlement of some sort, I just don't think people take the SEC thing that seriously. So I don't know if you think that. I think a good resolution, when that happens, we will see extra bullish action in that moment. But I don't think that means like that's the difference between 200x and 50x. I don't believe that whatsoever. But what do you guys think?
What do you think, Ewok?
I don't think so either. I mean, I think it could quickly pump, and he and I disagreed on this 2 weeks ago or whatever it was. But I think if there's a victory within that case, I think we could easily 10x within 30 days just off of that news. It could retrace, but I think it could easily do.
I think you're going to get, and I think you're right, and I think you're going to get new whales from ETH to come into play. Like that's why they're going to basically get their coins at that point.
Yep.
You know, all it takes is like 5 of them to talk to each other. And then the 7th guy hears it, and then the 9th guy hears it, you know, from a friend of a friend of a friend, and then it's like, okay, by that point,
yeah. So I mean, I think there's a lot of money on the sidelines waiting. I think there's a lot of bullish sentiment that comes out of it, and I think we just see a moon pretty quickly. I mean, like I said, it could pull back too. I think we'll see a pretty immediate sell-off if it does that 10x in a month. I do think we'll get a pullback, but I think you'll see a nice little run up as as a sentiment. And you said it too. Even RH could come in and just blow it up because he's happy.
And there'll be eyeballs. Why not take that chance to,
Yeah,
you know,
it's good marketing. Good
Even
marketing.
just bridging in like, you know, $500 million or $200 million of ETH would be a huge boost to the network, just the confidence of people, you know.
Totally. Yeah. All right, boys. Well, hey, this has been phenomenal. Axis, one more time, go ahead and let everybody know where they can find you if they want to sign up with your group as well. I know Cody Pauly earlier said that he was planning on signing up tonight, actually. So, yeah, let everybody know where they can find you. Yeah.
Hey, man, Cody, looking forward to getting to chat with you a little bit. We got a really tight group of guys and ladies as well. We actually probably have more ladies than any other probably group out there, I think. Well, PulseChain's actually notorious for having a lot of female supporters, so that's pretty cool. But yeah, so you know, accessalive.com, check out the services tab if you want something from me. And then x.com/accessalive is like, I'll be posting a lot more charts and looking at the macro a little bit. And if you go on there, you'll see like a post that's been recent. I retweeted somebody that was talking about this global liquidity cycle reset that's happening, which we're at the bottom, which means that we're about to see massive injections of liquidity, which makes sense because there's $9 trillion of debt overhanging the government right now. So they're going to have to do something about that. Typically that ends up in some sort of QE or money printing. So that always bodes well for crypto price appreciation. Yeah, so check me out, check all that detail out on X for free. And let's see, youtube.com/accessalive for streams, although I don't have anything planned yet. I'll try to get something planned in the next week or so, and be happy to be back on anytime you guys want me.
Absolutely, man. Awesome. Yeah. Always a good time with you. I know we talked in the green room about kind of talking more, you know, not necessarily political, like you said at the top of the show, but just what is going on in the United States right now, just kind of the way things are moving. And we just have so many bullish things with crypto to get to. We didn't quite get there tonight, but I would love to explore that with you too. Hey, we're 4 months away from an election that we'll probably have a lot of opinions on. So that'll be interesting too. So we'll probably explore that stuff down the line as well. So, yeah, for those of you still here, do us a favor, hit the like, support Axis, support our channel, support Real DeFi. We appreciate you guys being here. We do this every Wednesday night at 6:30 p.m. Eastern Standard Time. We will be back at that time next week. So for Axis Alive and Crypto Ewok, this has been Boi Crypto right here on the Creed of Crypto live stream. See you guys.
See you, gentlemen.
See ya.